Hello everyone, welcome back. Let's break down what's really driving markets right now. Macro environment is no longer being driven purely by economic fundamentals. Geopolitics has moved to the center of market behavior. First, consider the rising tension in the Middle East, particularly involving Iran and the presence of the United States in the region. Key risks The risk around key shipping routes, like the Strait of Hormuz, is adding a structural premium to oil prices. This is not a one off shock, it's a recurring risk that markets are now pricing in consistently. For energy importing countries, this translates directly into inflation pressure. Second, the strategic competition between the states and China continues to reshape global trade. We are seeing a gradual but clear shift away from efficiency driven globalization towards security driven supply chains. Manufacturing is being diversified and the capital is being reallocated across regions, especially towards emerging markets. Third, the central banks are now operating in a much more constrained environment. Inflation is no longer just a demand side issue, it's increasingly driven by supply disruptions linked to geopolitical events. That makes monetary policy less effective and forces a higher for longer interest rate scenario. For India, this creates both opportunity and risk. On one hand, supply chain diversification works in its favor. On the other, dependence on energy imports means continued exposure to global price shocks. The key takeaway is simple: geopolitics is no longer a background variable now. It is now a primary driver of inflation, trade flows, and capital allocation. Thank you.